So the market just had one of its biggest sell-offs in the past year. Check this out, guys. This is Ricky with TechBet Solutions. I really hope that you learned something new. And if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. The market was trading quite bullish, right? Just like it has been at least for the past 4 trading months, going back to retest the same previous resistance that it's had right around $4.50 a share. We went back to retest, and then all of a sudden, there was this very, very aggressive sell-off. And remember, when the NASDAQ market, when Dow Jones, and when the S&P 500 sell off, it brings down the rest of the market down with it. I mean, I want to use even Tesla as an example. Tesla was performing exceptionally well, and then all of a sudden, boom, very aggressive sell-off. Not just Tesla, but let's go ahead and talk about the rest of big tech. Apple, very aggressive sell-off. Let's go ahead and talk about NVIDIA. NVIDIA is trading right back at $850 per share from $906 all the way back down to $850, a very aggressive sell-off. What caused it? I want to keep today's video super short and sweet. Super, super simple. There's sometimes that you can prepare for market sell-offs based off of market expectation of economic reports. Today wasn't necessarily so much on an economic report, but it's who said what. And it says the S&P 500 and the NASDAQ composite tumbled 1.2% or 1.5% respectively. The three major averages swung into the red in the afternoon as crude oil jumped, and Minneapolis Federal Reserve President Neil, I don't know how to pronounce that last name, questioned if interest rates should come down due to sticky inflation. So this is something that we've been talking about for such a long time. Just that the Fed hasn't really commented on it. You guys, we even heard him yesterday. Jerome Powell, who is the head of the Federal Reserve, just doesn't really comment on. He just always states that CPI and that overall inflation reports are fine. They're going as expected. I mean, he hasn't said anything crazy. I mean, they still want to state the course and potentially cut interest rates. He thinks that we are at the peak of potentially where the Federal Reserve can then begin to cut interest rates. At least that's what he shared yesterday. With what we are now hearing is this is something that if you look at the data, right, with CPI data report, PPI data report, that's consumer inflation report, it's been super simple to see that inflation is not going down. It's been sticky. It's been staying, if not going up, and going higher than what was originally expected. So this shouldn't come as a surprise. And this is why, again, finally someone comments on it, and obviously the market overreacts. You might be like, well, Ricky, why was there such an aggressive sell-off? Well, there's aggressive sell-offs like we experienced today because there's such aggressive pushes or rallies for no given reason, right? The market has been so incredibly bullish in just the past 4 to 5 trading months, right? If you look at this and we look at this at the overall day chart, I mean, look at this huge growth, right? This is all the past year for 2023. And then in 2024, from January, went from $490 per share on NVIDIA all the way to highs of nearly 1,000. I mean, let's just talk about the overall NASDAQ index. We can look at QQQ, which is a 1-for-1 with NASDAQ, right? We pretty much traded sideways. We can see right on over here to the start of 2024. And then all of a sudden, we really began to take off. This is the first time in quite some time that we finally pull on back and go and test the EMA line. So now my question is, okay, now are we finally going to begin to correct ourselves and sell back off to the moving average? Or is this just an overreaction, a nice little correction to test the EMA, and we're going to go back to continue to indicate signs of higher highs and higher lows? So that's what I'm going to pay attention to. It's too early to tell. Again, I'm going to see tomorrow and going into next week, especially as they begin to release the Fed minutes. Fed minutes, I believe it's on April 10th of next week. Subscribe to the channel. I'll make sure that I keep you guys up to date. But my question is, are we going to bounce at this EMA on the day chart for NASDAQ and continue to recover? Or is this the peak and then we're going to begin to sell off? That is the question that I'm asking myself because I want to prepare to either go long with the rest of the market if it continues to rally, or be prepared to go short if direction is actually in my favor and if markets finally begin to drop. You cannot be surprised, or we can be surprised because everyone was surprised by today's sell-off. I mean, that was an overreaction. You cannot think it's out of left field of like, oh my God, that's not fair. Why did the market sell off today? That makes no sense. It's made no sense on why it's been running higher for longer, right? So now it's just a correction. Anytime that there's an overreaction on the way up, there's an overreaction on the way down. And this was long overdue. Fortunately, today it happened. But guess what? If it recovers, that presents a great opportunity for those that stayed cash today. And if it continues to sell off, then great. we can break below that EMA and then begin to short. Again, we'll talk about this more in tomorrow's live trading session, and I hope to see you there. That's the second link in the description down below, and it's 50% off right now. So again, click that link, sign up. I'll see you tomorrow at Market Open, and if you have any questions before signing up, feel free to comment down below. I appreciate your time, and like always, let's make sure that we end the year on a green note. Take care, team.